In this lesson, I'm going to cover the regulatory framework and compliance for fintechs. We will cover the following areas in this lesson. First, we discuss how regulatory requirements are shaping the fintech sector. And then we explain the importance of regulation and compliance for fintechs. Next, we will identify the key components of RegTech, which is regulatory technology, and explain the role of RegTech in strengthening regulatory compliance. And then we wrap up the lesson by looking at the international compliance and regulation and how those are impacting fintechs, as well as explaining how regulators are responding to fintech innovation. Let's look at how regulation is shaping the fintech sector. Regulatory requirements are playing a pivotal role in shaping the fintech industry. As fintech companies continue to disrupt traditional financial services, regulators are stepping in to ensure consumer protection, financial stability, data security, and fair competition. Let's start off with regulations that promote consumer protection. Regulations such as the GDPR, which is a regulation that promotes consumer protection in Europe, impose strict rules on how fintech companies collect, store, and use consumer data. These regulations force fintech firms to invest in secure data infrastructure and transparent privacy policies, giving users more control over their personal information. Now, the following are the impacts of regulations that promote consumer protection. The first is we tend to have more secure apps and platforms. There is increased consumer trust. And on the flip side, all these come at a higher cost. So there's higher compliance costs for startups. Next, we're going to look at how regulations that enhance financial stability are impacting fintechs. Now, fintechs involved in payments, lending, or neobanking, that's digital banking, must adhere to prudential regulations similar to traditional financial institutions, such as the traditional banks. So for instance, digital banks may need to meet capital adequacy and liquidity requirements to mitigate systemic risks. The following are the impacts of regulations that enhance financial stability. First is better risk management practices. Now, because the regulations that are designed to enhance financial stability pretty much require that fintechs put in systems to help them mitigate systemic risks, for example, meet capital adequacy requirements, and enhance liquidity. Now, by so doing, fintechs better manage those risks. Next impact is safer integration into the broader financial ecosystem. And last but not the least, slower scaling for aggressive fintech models. Now, because you have these requirements, for example, capital adequacy requirements, liquidity requirements, mitigating systemic risks, fintechs cannot aggressively increase in size or expand aggressively, right? Because there are these requirements, and that ensures that fintechs scale up slowly and maintain financial stability. Now, the third set of regulations we're going to look at are regulations that encourage innovation through sandboxes. Now, regulatory sandboxes allow fintechs to test new products in a controlled environment without immediately being subject to full regulatory compliance. And the following are impacts of regulations that encourage innovation through sandboxes. First impact is faster time to market for new solutions, new products, new services developed by fintechs. Next is opportunity for real-time regulator feedback, because once fintechs are using these regulatory sandboxes, they can get real-time feedback on the designed product or service from the regulator. Next, it encourages collaborative policy development, because there's collaboration, right, between the fintechs and the regulators. And this pretty much encourages collaborative policy development. Now, we're going to move on to regulations that combat money laundering and fraud. Now, fintechs are subject to anti-money laundering and know your customer requirements. This includes identity verification, transaction monitoring, and suspicious activity reporting. Now, as a result of these regulations, the following are the impacts. Number one, improved fraud prevention systems. So as a result of the AML and KYC regulations, we have improved fraud prevention systems. And then we tend to see the use of AI and biometrics in onboarding. And on the flip side, these come at a higher cost. So fintechs tend to have increased operational costs as a result of these regulations. Next, we're going to turn our attention to regulations that level the playing field, or, if I may say, democratize financial services. Now, regulators aim to ensure that fintechs don't exploit regulatory gaps so that we have a level playing field or fair competition among fintechs. So, for example, the evolving open banking initiative or open banking regulations and the second Payment Services Directive, PSD2, in Europe forced traditional banks to share customer data with third-party providers, of course, with the user's consent. And this encourages competition and innovation. So the following are impacts of regulations that level the playing field. By leveling the playing field, of course, we're going to have democratization of financial services. And then we're going to see new fintech business models. So for example, because of the open banking initiative, where customer data becomes portable, shared with third-party apps and platforms. So with that, you're going to see new fintech business models, because application programming interfaces is the primary system that allows for the sharing of customer data between, for example, the traditional bank and fintech apps, okay? So you tend to see these API-based services being started, all right? So we tend to see such businesses, such fintechs being set up. So, and these are API-based, application programming interface. So they provide that service where one is able to share customer data. And last but not the least, impact of regulations that level the playing field will be tighter cooperation between fintechs and incumbents, such as the traditional financial institutions, like the traditional banks. Now, finally, we're gonna look at the impact of cross-border compliance complexity on fintechs. So I'm gonna just look at that last impact. Again, we're gonna examine the impact of cross-border compliance complexity rather on fintechs. Now, global fintechs, these are fintechs that operate across borders, across different countries internationally. Now, such global fintechs must navigate multiple regulatory frameworks, obviously, because they operate in different countries, right? Each with different standards for privacy, licensing, and taxation, for example. Now, as a result of these cross-border compliance complexity, because you have different regulations across countries, so across borders, one, as a global fintech, one will be forced to navigate through all these different regulations, complex, different regulations, and comply with them. Now, as a result of the cross-border compliance complexity, we see that fintechs operating across borders, that's global fintechs, will need robust compliance departments. So they are forced to establish robust compliance departments in order to be able to comply with the various regulations across the different countries. And then you tend to see the rise in RegTech partnerships. Now, RegTechs are fintech firms that specialize in helping companies, financial institutions, to comply with regulations. So you tend to see a rise in RegTech partnerships. And we also tend to see slower global expansion for small players. So for the smaller financial institutions, we tend to see slower global expansion. So we're now going to explain the importance of regulation and compliance for fintechs. Now, let's take note that regulation and compliance are absolutely critical for fintechs for several key reasons. The first key reason we'll look at is the building of trust as a result of regulation and compliance. Now, compliance builds credibility. So investors, partners of fintechs, and customers of fintechs are more likely to engage with fintechs that operate within legal frameworks. And regulatory licenses or approvals serve as a stamp of legitimacy in a highly competitive space. So when a fintech shows evidence of regulatory licenses or approvals, they establish legitimacy in that highly competitive fintech space. Next, we're going to look at the encouragement of innovation in a responsible way. Now, while regulation can seem like a barrier, well-designed compliance frameworks provide clear rules of engagement and reduce legal and uncertainty, of course, for fintechs. So that's a benefit. That's an important benefit of regulation and compliance for fintechs. It also allows room for innovation within safe boundaries, like the regulatory sandboxes mentioned earlier on. Third importance of regulation and compliance for fintechs is that it helps to avoid legal and financial penalties. Now, on the flip side, non-compliance can result in heavy fines, license revocations, or even criminal charges. One can also have consequences such as loss of customer trust and reputational damage, which can be fatal for early-stage fintechs. And finally, we're going to look at enabling scalability as an importance of regulation and compliance for fintechs. Now, if a fintech wants to expand internationally, regulatory compliance is key, it's important. Each country has different rules, and being compliant early prepares companies for cross-border growth. And of course, adhering to global standards like the PSD2, for example, makes expansion smoother. So that makes scaling up easier for fintechs if they are in compliance. Let's now look at RegTech and identify the key components of RegTech. First point is that RegTech is the short form of regulatory technology. And this refers to the use of technology to help organizations to comply with regulations efficiently and effectively. So now let's look at the key components of RegTech. First component we'll look at is the data collection and integration, which is a component of regulatory technology. Now, such systems automate data gathering, and they enable the collection of large volumes of structured and unstructured data from internal and external sources. Now, part of the data collection and integration systems will be APIs and data feeds. Now, these help with integrating financial systems, exchanges, and regulatory bodies. And remember, APIs allows, that's application programming interfaces. They allow for sharing of data. Now, the second component we're going to look at is data analytics and processing systems. So within data analytics and processing systems, we're going to look at AI and machine learning. Now, AI and machine learning are data analyzing tools. We use AI and machine learning to analyze data, and they help to detect trends, anomalies, and also potential compliance risks. Now, within data analytics and processing systems, we also have natural language processing, NLPs. Now, these help with analyzing legal and regulatory texts. And last but not the least, within data analytics and processing systems, we have big data analytics. And big data analytics help to manage and interpret massive data sets for compliance insights. The third component of RegTech we're going to look at is identity verification and KYC, that's know your customer. So such systems would include digital identity tools, such as biometrics, document verification, and facial recognition. We also do have KYC and AML, AML being anti-money laundering systems, KYC, AML systems, which automate the know your customer and anti-money laundering processes. Those are all automated. Next, we're going to look at risk management and monitoring systems. Now, within the risk management and monitoring systems, we have real-time monitoring systems, which provide ongoing surveillance, monitoring of transactions, behavior, and marketing activity in order to detect breaches, for example, or anomalies. Next, we have the predictive analytics, still within risk management and monitoring systems. Those assess risks before issues arise. So they predict possible risks so that one can respond to such risks. And last will be scenario analysis that performs stress testing and simulations, again, to help mitigate or manage risks. The fifth component we're going to look at is regulatory reporting. So systems that help with regulatory reporting, to the regulatory bodies. So we have automated reporting tools, and these generate compliance reports as required by the regulators. And then we have standardized formatting tools. So they ensure that the outputs match regulator expectations. So for example, any filings that need to be filed with a regulator, if required to be in a specific format, these standardized formatting tools would ensure that the filing is in that specific format, such as XML or XBRL. Number 6, we're going to look at compliance management. That's the 6th key component of RegTech we're going to look at. And within compliance management systems, we have tools like rule engines, and these encode regulatory rules for automated decision making. And then we have policy management tools, which update and communicate internal policies and procedures. 7th component we're going to look at is audit and record keeping. So these audit and record keeping systems include tools like immutable logs, which provide secure time-stamped records for transparency and audit readiness. So make sure that the system's reports are ready to be audited and to comply with audit requirements. And then we have blockchain in some solutions, which enhance traceability and integrity of the data and systems. The 8th component we're going to look at is cybersecurity and data protection systems or tools. And here we have encryption and access control. So this helps to protect sensitive financial and personal data. And then compliance with data regulation tools, which ensure alignment with various data protection regulations. The 9th component of RegTech we're going to look at is regulatory intelligence systems. And within those systems, we have regulation tracking tools. These tools monitor changes in regulations, in the laws, standards, and guidelines. So they monitor changes in regulations generally and alert organizations to then trigger the compliance processes. And within such systems, we have automated alerts. So they notify relevant stakeholders of updates to rules and regulations. And the last component of RegTech we're going to look at is user interface and dashboards. So here we have, for example, visual analytics tools, which provide easy to understand dashboards for compliance officers. And then we also have workflow management tools, which help to manage compliance tasks and approvals. So now we're going to explain the role of RegTech in strengthening regulatory compliance. Again, RegTech, which is a short form of regulatory technology, plays a vital role in strengthening regulatory compliance by using innovative technology to help organizations meet regulatory requirements more efficiently and effectively. So we're going to look at how this is achieved, right? So we're going to look at how this is achieved. And the first is automation of compliance processes. So that is one way by which RegTech strengthens regulatory compliance, by automating the compliance process. So we have RegTech tools that automate routine and repetitive compliance tasks, such as monitoring transactions, filing reports, screening customers against sanctions lists, for example, and then audit trails and documentation. Now, these automation of compliance processes systems reduce human error, increase efficiency, and ensure timely compliance. Next, we're going to look at real-time monitoring and reporting. So RegTech solutions provide real-time data analytics, continuous surveillance, and instant alerts for suspicious activities, which help organizations to identify and address compliance issues proactively rather than reactively. Third, we're going to look at advanced data analytics and AI. So using AI and machine learning, RegTechs can detect patterns of financial crimes such as fraud and money laundering. Using AI and machine learning, RegTechs can predict compliance risks and also enhance decision-making for compliance officers. Next, we're looking at regulatory change management. So RegTechs help firms to stay up to date with evolving regulations. And they automatically update internal policies and processes as a result of that and ensure alignment with international and local compliance standards. Next, we're going to look at risk management. Now, by providing detailed risk assessments and dashboards, RegTech tools help firms to understand their risk exposure and prioritize compliance efforts and allocate resources more effectively. Next, we look at cross-border compliance. So multinational companies face multiple regulatory frameworks that they need to comply with. RegTechs help such situations by harmonizing compliance procedures across different countries, different jurisdictions, and managing data localization and privacy rules, as well as simplifying global regulatory reporting. And last but not the least will be audit readiness. Now, with comprehensive logging and documentation features, RegTech solutions make audits faster and smoother. They improve transparency and demonstrate compliance to regulators more easily. Let's now discuss how regulators are responding to fintech innovation. Regulators around the world are responding to fintech innovation with a combination of adaptation, collaboration, and oversight. As fintech rapidly transforms traditional financial services through digital banking, blockchain, AI, for example, Regulators are trying to strike a balance between encouraging innovation and protecting consumers, enhancing financial stability, and market integrity. So, for example, regulators protect consumers by imposing rules to safeguard consumers' personal and financial information, and also put in place measures against fraud, identity theft, and unauthorized transactions. Regulators enhance market integrity by passing regulations that prevent market manipulation, insider trading, rather, and other forms of financial misconduct. And this ensures that fintech markets, rather, operate fairly and efficiently. Now, bearing in mind that new financial products and services could pose risks if not properly regulated, regulators put in regulations that help monitor and mitigate these risks, ensuring that rapid growth does not lead to systemic vulnerabilities, such as systemic failures. Let's now turn our attention to some key regulatory frameworks that impact fintechs. And we're going to start off with the Digital Financial Services Regulation, that is DFSR. So that's the legal and regulatory frameworks governing digital financial services, such as mobile banking, digital wallets, and online lending. Now, this regulation ensures consumer protection, financial inclusion, financial stability, cybersecurity, and anti-money laundering and counter-terrorism financing compliance. The next key regulatory framework we're going to look at is the Basel III. Basel III is an international regulatory framework developed by the Basel Committee on Banking Supervision, and it's designed to strengthen the global banking system by improving capital requirements, risk management, and transparency. And Basel III was established in response to the global financial crisis in 2007, 2008. Now we're going to look at Canada's regulatory framework. Canada has a robust regulatory framework involving multiple levels of oversight by federal and provincial regulators. And then there's also the self-regulatory organizations and specialized agencies. And we're going to start off by looking at the Canadian Investment Regulatory Organization, CIRO. So the CIRO oversees all investment dealers, mutual fund dealers, and trading activity. And they perform regulatory functions of the Investment Industry Regulatory Organization and the Mutual Fund Dealers Association of Canada. And the key focus is protecting investors and providing efficient and consistent regulation. Next, we're going to look at the Financial Consumer Agency of Canada, FCAC. So the role of the FCAC is to supervise financial institutions' compliance with consumer protection laws and regulations. And their key responsibilities include promoting consumer rights and ensuring financial institutions respect consumer protection laws. They also educate Canadians on personal finance and investigate complaints and ensure proper disclosure of financial products. Next, we're going to look at FINTRAC, which is Financial Transactions and Reports Analysis Center of Canada. And the role of FINTRAC is to detect and prevent money laundering and terrorist financing. So FINTRAC is Canada's financial intelligence unit. and it works to detect and prevent money laundering and terrorist financing. The key responsibilities of FINTRAC is receiving, analyzing, and disclosing financial information related to money laundering and terrorist financing activities. And then, of course, they also ensure compliance with the Proceeds of Crime and Terrorist Financing Act. Let's now look at key Canadian legislation that impacts fintechs. We start off with the Securities Act. This is legislation that governs the regulation of securities markets, investment advisors, and public offerings in Canada. So again, the Securities Act is a body of legislation that governs the regulation of the securities markets, investment advisors, and public offerings in Canada. So these are federal and provincial laws. Next, we have the Bank Act, which governs the activity of federally regulated banks in Canada. And third, we have the Proceeds of Crime, Money Laundering, and Terrorist Financing Act. Now, this governs anti-money laundering and anti-terrorist financing regulations. Let's now discuss compliance within the context of fintechs. Compliance refers to the adherence to laws, regulations, guidelines, and specifications relevant to the business, and in this case, relevant to the business of fintechs. Now, for fintech companies, compliance is critical not only to avoid legal penalties, but also to build trust and credibility with consumers and stakeholders. Let's now discuss KYC and AML regulations. Now, KYC and AML regulations require fintech companies to verify the identities of their customers and monitor transactions for suspicious activities. These measures help prevent money laundering, terrorist financing, and other illegal activities. Compliance with KYC and AML regulations is essential for maintaining the integrity of the financial system. Now, looking at data protection and privacy regulations. Now, let's take note that data protection regulations, such as the GDPR, that's the General Data Protection Regulation in the EU, mandate how companies collect, store, and use personal data. Fintech companies must implement robust data protection measures to comply with these regulations and ensuring that consumer data is secure and privacy is maintained. And let me also emphasize one more time that if fintech in Canada or North America, for example, will still need to comply with GDPR, which is an EU regulation, if it has customers that are in the EU, or, for example, there is a payment from Canada to the EU, or vice versa, okay? That makes the fintech subject to the GDPR regulation. We'll now look at other compliance in fintech, other compliance requirements in fintech, and our focus is on operational resilience. Now, regulatory bodies require fintech companies to demonstrate operational resilience, meaning that they can continue to provide services in the event of disruptions. Now, this includes having contingency plans, disaster recovery procedures, and cybersecurity measures in place to protect against operational risks. Finally, we will look at how regulators are responding to fintech innovation. The rapid pace of innovation in fintech presents ongoing challenges for regulators and companies alike. As new technologies emerge, regulatory frameworks must adapt to address potential risks without stifling innovation. Regulators are responding to financial innovation with the following measures. The first is the creation of regulatory sandboxes, which we discussed earlier. The next is developing fintech-specific regulations, and then enhancing collaboration with fintechs and supervision, and then using technologies such as RegTech and SupTech, that's supervisory technology, addressing key risks, and last but not the least, promoting consumer protection. And that brings us to the end of the regulatory framework and compliance lesson. I hope you've enjoyed this lesson, and I look forward to delving into other areas of fintechs with you.